right, ladies and gentlemen, those are the headlines we're tracking this hour, and we will be taking a look at some of those stories a little later on the show. But first, let's start with the top story tonight, and that is about the Federal Reserve kickstarting that much anticipated series of interest rate cuts with that supersized 50 bips reduction coming in. Now, Central Bank Chairman Jay Powell, while detailing the move, said that it's meant to show policymakers' commitment to sustaining a low unemployment rate now that inflation, he said, has eased. But it seems the Bank of England has not followed Fed's suit and is maintaining its key interest rates at 5%. And the Bank of Japan is meeting tomorrow to discuss their monetary policy. So what should investors be keeping out an eye for? What do Fed's rate cuts really mean for the global economy and for central banks all across the globe? Let's listen in to what the Fed chair said, and then we'll take forward the discussion with our special guests who are joining us in just a short while from now.
In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting.
All right, so Jerome Powell over there speaking about that supersized rate cut that has just come in. And of course, to discuss the story further, we're now joined by Anurag Singh, who's the managing partner at Ansid Capital. He's joining us from Chicago. And of course, joining us also is Santosh Rao, the head of research and partner at Manhattan Venture Partners. Thank you very much, Anurag and Santosh. Great having you back again on ET Now. I want to first come to you, Anurag. What's your key take on the message today by Jay Powell to all the markets, to the investors, with the commentary that came in, and of course with that supersized cut? Was it along expected lines?
Yeah, Sumita, good evening. Yeah, I mean, so it was not on expected lines, and you know, sometimes I feel you know, the central bankers just relish the way they want to surprise the markets. You know, they surprised everyone on the way up. When the world was crying that you are behind, inflation is here, they waited for like 6 months. Then they announced in November 21 that they are going to hike, and they started with 25 BPS, you know, just after like in February or March, right? So talk of the delay, there it was. And now just when everything looks okay, they surprise everyone with a 50 basis point. I think, Sumita, the only plausible explanation, and Chair Powell almost came to admitting that, was that, you know, we could have done a 25 bips in July meeting. And because the August jobs data was not there with them, and so they wanted to make up for that 25 bips by passing on 50 now. But anyways, it's, you know, more rate cut, the better. It's fine, we'll take it. But, you know, that's the most plausible explanation. Ultimately, we have to also watch out at the end state, which is something called as the neutral rate. Ultimately, it's going to be 3%. That's what the dot plots say, but they are all over the place in terms of, you know, the median is 3, but it is all over the place. So we'll have to see. My sense is it could be around 3.5.
Right.
You know, and that's where we stand right now, Sumita.
Okay, so Anurag, you are stating that this was not along expected lines, and there has been a surprise that has been thrown at investors and, of course, the markets. Let me take your comments in, Mr. Rao. I mean, there are theories that the 50 bips cut could very well be a sign of a weak economy, also given that there are concerns still pending around, lingering around the labor markets and, of course, unemployment. Now, this is something, if you remember, that's also been voiced amongst Fed members. And let me take you to the commentary that came in from Jay Powell this morning about unemployment. He said that labor markets are cooling, unemployment rate has moved up, and GDP growth will remain solid 2% over the next few years. However, you know, the concerns over unemployment and of course that recession have not really been waned. What is your take on that? Are the concerns valid?
Yeah, absolutely. See, you know, I was in the 25 basis point cut for the same reasons that the Fed chair gave yesterday. I mean, the economy is strong. Everything is kind of moving along nicely towards a glide path to their targets. So the inflation is on a glide path to its 2% target, and the unemployment, employment rather, is in a good state. So I thought, just for those reasons, he'll keep it at 25 and then keep the option of raising it further down. There are 3 more cuts to come. So 3 more meetings to come after this. So in a way, he became an insurance agent yesterday. He bought insurance yesterday. He wants to like he said, he doesn't want to be behind the curve. He wants to make sure that he's on the curve. And that's what he did. So things are bad. It does raise questions. Does he know something that we don't know? But at this point, I think this seems to be right. He will just calibrate that. His big word yesterday, calibration. He will just keep on doing that. He might do 25, 25, 25 next 2 meetings. I think there are 2 meetings left, 25, 25 or 50, 50, whatever the combination is, 100 basis points for the full year. That's his target. So he'll do that. He front loaded that in a way.
Right.
So
Right.
yeah, so the economy is in a good shape. He said that the data supports that, but they just want to make sure that they don't fall behind.
But there's something, you're stating that there's something that, all of us don't know. Perhaps the Fed only knows, but both of you coming together on that point about this being a surprise move by the Fed. Let me come to you, Anurag, on that point. Now, this is a surprise move, and while both of you say that 25 bips is what everybody was expecting, surely there is a political angle to this, given elections in the United States are just about 2 months away. So what does this really mean for the election, especially when economy has been a difficult needle to thread this election?
Yeah. So, Sumita, look, we can continue to talk all we want on the political side of it. I don't think, that has been the... See, look, Chair Powell and even the others, I understand they are all political appointees, but at the same time, they are reasonably well protected. They don't want to leave the legacy that, they let the inflation run away like Arthur Burns, right? So I think all said and done, that's top of their mind. I mean, we'll have to give to Chair Powell that he probably admitted that, well, July, had they known the August report, they would have done it in July itself, right? So that's fine. I mean, they've caught up. Anyways, the 10-year yield was at 3.7, 3.8. So they needed to close the gap with the 10-year yield as well, right? So I wouldn't read too much into the political side of it. It doesn't... I mean, the general voter is pretty oblivious to all of these things. I'm not going to think that they will say, oh, now it's 50, and so let's vote for one side or the other.
I would disagree with you on that point. Anurag, I would have to disagree with you on that point, because the economy has one of the key, key concerns, joblessness and, inflation in general. Those have been the key concerns so far as the US, citizen is concerned. But on that point, let me come to you, Mr. Rao. Let's shift our focus now to the Bank of England. While, the Fed has come out with this rate cut, but the Bank of England has maintained the key interest rate at 5%. This was an 8-1 vote, perhaps signaling a cautious approach. How do you really see this decision coming in from the Bank of England?
Yeah, I think what the Fed decision did yesterday was it cleared the deck for other central banks to also calibrate their rates. They were all worried about where the Fed would be, because they didn't want to devalue their currencies, kind of lower their rates, and then all that stuff, and devalue their currency. So I think that was a big concern. But at this one, by cutting this much, I think it gives a license to others. But in terms of the BOE rather, they already cut last time. Their services inflation is still very high. There's no guarantee that things are coming down as fast as they want. So they're playing it safe. They want to really bring it down very gradually, because they still have some issues there. And so same thing with Bank of Japan and all that. I think they're all going to calibrate slowly now that they know that where the Fed stands and where they want to go in the future. So they have the dot plot. So they have some roadmap as to where to go in terms of, and they'll calibrate their based on their economies. Like Australia is not going to do it because they have some other issues, but India might do it, South Africa might do it, cut rates rather. So it depends on this thing, but what they have is they got a green light yesterday from the Fed saying that, okay, the deck is clear, we are cutting our rates, so you can go ahead and do yours. In a way, that's implied.
Okay. And on that point, let me also come to you, Anurag, and ask about BOJ, Bank of Japan. Is it going to maintain status quo so far as the rate cut cycle is concerned? What are you anticipating?
So, Sumita, the opinion is pretty divided on that Bank of Japan front. Look, I think ultimately they are dealing with the right level of the yen to dollar currency exchange, right? And somewhere if they want to go with the previous average of like 120 to 130 range, I think then they got to raise the rates. But currently consensus is that they'll probably pass 125 BPS. Until the economy is good, they can use that to pass 25 BPS more. But probably this may not be the meeting where they want to do that, given, of course, the yen carry trade fiasco that happened last time they raised the rates, right? So they don't want to spook the markets. I think they've calmed the nerves enough, saying that we'll be very gradual about it. But ultimately, it depends on what is their long-term outlook on what should be the right exchange rate between US dollar and Japanese yen. By the way, let's have a long debate on the political side of it some other time, Sumita. That's a good one.
Absolutely. Anurag, I had to tackle that question given the timing of this cut coming in as it does. And of course, you were stating that, a 25 bips cut was what was generally expected. Let me come to you, Mr. Rao. Now, what does this cut really mean for global, rate easing cycles, especially for emerging markets like India? When do you expect that first cut to come in, given that inflation has cooled off considerably? However, there might be worries that the central bank says that are persisting. But when is that rate cut coming in? How many cuts do you expect the central bank in India to take? We were speaking to an economist just yesterday, and he stated that he expects 2 cuts to come in.
I think I have no reason to disagree with that. In general, I think rates are coming down. They've been high. People are worried about their payments, the interest payments and all that. So I think this is a good time to cut rates and normalize it, essentially. It's really coming down to normalization. And this is a good time because inflation is coming down. The labor markets are not as tight as before. So I think you can afford to do that. So two rates seems possible. What they're going to essentially do is wait and see and soft land this whole thing. And same thing in India, because they want to go slowly. Every country is different, of course, but then we still have some geopolitical events. One big factor driving inflation down, especially the headline inflation, is the energy prices coming down. But that can flip around if things get bad here and there. Any geopolitical event can spook the market there on the energy side. So I think that's a big thing. So they don't want to be too aggressive in cutting rates. They want to be cautious, see how things are going, and then continue on that track to generally bring it down to a normalized level.
All right. So you're also agreeing with economists stating that 2 rate cuts might be on the anvil so far as the Indian Central Bank is concerned. We'll wrap this chat on that note. Thank you very much, Mr. Rao and Anurag, once again for joining us here on ET Now. We'll have to see how the rate cut trajectory pans out across central banks across the world.